The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and as promised, I will try my best each day to give kind of an overview of different indices that I consider to be the most important and that we are looking at. And thank you, Steve, for 2 great hours. And what's today? Wednesday. Wednesday, of course, we've got Larry Pesavento coming in straight after me. You've got Daryl Martin. You've got Dave White. You've got Wednesday. You've got Tom O'Brien, 4 o'clock till 6. So let's go straight to the music. Actually, we heard some great music in the break just a moment ago. It was Nat King Cole, the original Nat King Cole trio. And I told a funny story there. Nat King Cole was a pianist, and he had his trio, which is guitar, piano, and bass. And is it bass or drums? But good trio. And he was in the club, and he had a singer that used to sing with him in the evenings. And the club manager comes up to him and says, "Hey, where's the singer?" He says, "The singer didn't show up." He says, "No, I gotta have a singer. Sing." And he started singing, and that really started off his career as a singer because he was really a pianist. So it was a great Nat King Cole with a velvet voice. There was a boy. So now what we're looking at here is that the Dow is up 15 at 15,982. So I'm just, first of all, if you're looking at my charts, go straight to the front page of TFNN. You click on the 3 icons right there, and within split second, it comes straight up, and you'll see the charts. You'll see them live because I'm showing you right now the daily chart of the E-minis. I'll show you some of the techniques that I love to use. They seem to work very well, and I only use techniques that I've tested for years, and then I include them in my work because they've been through with me having paid the costs of the tuition. They finally have matured into something that I consider to be viable. Now, you're looking at, on TFNN, you're looking at the daily chart. You see these trend lines? You see the green and red little narrow channel up there? Then a rising channel. That's called the rising wedge. A very familiar pattern to many technicians. A rising wedge very often culminates, it's already done it once, it culminates into a little cup formation. The rule, if you read the rules seem to say that the market should, the price should reverse and go sharply lower to at least one of the previous troughs, but it could even give the whole thing back. I just don't see that. I hardly ever see that. All that happens is it makes a little cup formation. After the cup formation, other things can happen, yes. Now, let's just do something else. The rising wedge formation has also made a peak D in the Chapman wave methodology. You want to go from the lowest low bar, count each successively high peak. Sometimes you can have an alternate count. It's not a big deal. As long as the price is acting well, it should be able to get you to a D. And it goes to 1799.75 December E-mini S&P contract. And look what happens. It pulls back for 1 day. That was yesterday. But now what it's doing is made a higher high and a slightly lower low. It isn't really an engulfing candle at this particular point. Most importantly, what I'm looking at is that the technicals here are very different to the Dow technicals at this potential peak F that's being made. I'll look at that in a moment. But here in the E-mini, you've got lower highs in the MACD when the price has gone higher. And the stochastics just made an inverted V formation. It's turning down, but it's still very strong at 85%. And that's the reason why you're still having some kind of internal, what I call residual strength, internal strength. 120-minute chart, there's this rectangle formation mentioned in the den this morning. Rectangle formation right there. Went a little bit lower, a little bit higher, but it's still stuck in this trading range, just right there. Holding the 9-period moving average, the technicals gave a nice signal. Price didn't rally as it should. It should have rallied sharply above the 1793.75 high of 12 o'clock of the 19th, which was yesterday. Still good action, and we're just watching this going sideways. Now let's get to the nitty-gritties. I'll run the numbers. The Dow, if I get a chance, I will look at the other chart. let's see. Oh, the right side. Oh, that's what the question was. Yeah, the right side is not showing. That's what was mentioned to me. Correct. The right side of the 120-minute chart, I forgot to move it over. It wasn't showing all the charts. You'll see the left side. You'll see the right side axis. You'll see everything you need to see, time as well as price. Now look at this. The Dow has made one doji at a peak F/B top, and the MACD was strong. Stochastic had reversed with the on-balance volume, but price is the arbiter of trend. As long as the price holds, you've got to respect that the rudder of the technicals is not kicking in because the tide is pushing it like a super tanker. It's still pushing it upward, but it's slowed down to almost a halt, but it hasn't reversed the trend. So what we're looking at here, one doji, two dojis, little candles that open and close pretty much at their opening price, tiny little wick, looks like a plus sign actually. Normally above an F, I'd put a plus sign. Let me show you something. I'll put the plus sign. That looks like it's a little candle that popped up over there. All right. So it's 16,030.28. That is the level to break. If you break that, if the Dow breaks that, I don't think I'm going to call that a G. I'm going to probably call that a C and say that we should have another pullback and then a leg D. And at that point, you've got to be real careful. That doesn't mean to say it can't fail from here. Why? Because the 100-minute chart made a peak E and is holding the 9-period moving average in that rectangle formation. Rectangles can last a lot longer than both your patience and your money if you're trading it and you trade incorrectly. Every time you think it's going to break down, instead it holds the bottom support and bounces to the top. Every time you think it's going to bounce over the resistance line, it comes right back, stays in the range. So you're supposed to buy the lows and sell the highs for at least a little period until you're proved wrong. So what we're looking at is the support. At any point, if there is just a sudden news announcement, and the way I'm looking at this, there could be at any point it could break to the upside, but I'm looking at the potential of what I'd be looking at on the downside. On the downside, the Dow would have to break and close under 15,000. I'd probably say 15,890 to 15,870. 15,878 is a 9-period exponential moving average. It really should break under that. If it breaks under that, I still can't give it a sell signal because the MACD will still be strong and the stochastic will be way above 80%. So I'm going to be watching this real closely because I think from everything I'm looking at, between the Dow, which is the strongest of the indices, the S&P, which is the next strongest, and the S&P has 1795.51. If it breaks 1 penny above that, I have to consider that's also going to be a brand new leg C. And that, like the Dow, could go a little higher. If it closes under 1781, 1783 is the 9-period exponential moving average at any point this week without taking out the high, then it gives me, that is a little different because that's probably going to go under 80% in the stochastic and break in the MACD. That'll give me a sell signal. I'm not even talking weekly charts now because we have to wait until Friday before we get there. Let's go to the QQQ. QQQ is acting okay. Made a peak D at 84.81, holding well, 83.22, up 33 cents, walking the 9-period moving average. The MACD's bad, stochastics at 74% turning down, yet the price is holding. As long as the price holds, you've got to respect that. In the IWM, which is the weakest of the 4 different indexes I'm looking at, you've got a cup formation that is trying to make another cup formation, but so far the technicals are very, very weak. This is the one that looks the most vulnerable because if the QQQ series takes out 108.99, the low of the 19th, that was yesterday, that says there's a real good chance that it's come back and test the candle going all the way to, I'm talking about the IWM. The IWM takes out that level. It'll take out and test the 108.62 low of the 13th. If it takes that out, you've got yourself a trading range that can go all the way down back to the 107 area. 107.14 was the low of the 7th. On the upside, if there is a cup formation forming, yesterday's high, 110.69, is key to break out of on the upside. Now, in my opening call, that's my daily service. a very comprehensive look at the different indexes. I show the Dow chart like this. Here's the Dow chart. I show the 120-minute chart, what I'm expecting. Here's the Dow chart every day with a bunch of commentary. I discuss what I'm looking for. Look, the MACD is still very good. And the stochastic is pulling back, but it's still in 91%. That's the reason why you're seeing the Dow so reluctant to break down. But at the same time, it's not showing the energy to break upside. Now look at this. This is the 120-minute chart, made a peak E at 16.30. It's got this kind of oval. It's more like a rectangle already. Formation, a break above it says that you can start to make another neck for the Chapman wave stalk leg formation. That should take you to about the 16,050, 70 area. Then you should come right back into the 15,970s. Now, this is the interesting. That's the 120-minute chart. The 120-minute chart of the VIX, and I spoke about this in my letter today. Chance of a leg D. Well, it did that at 13.94 this morning, but it's still holding pretty well at 13.24, down 15 cents. However, the fact that it's a D, and it was only able to get 11.99 to 13.94. Yeah, that's 2 points. That's about, 16% or something. That's not the issue. The issue for the volatility index to create the kind of selling pressure, continuous, all the volatility index does for me is it indicates selling pressure and buying pressure. And you've got to know which levels to look at. And every day I show my subscribers what to look for. And it says right here, needs 14s to really get the Dow to sell off sharply and hold lower. At 1290s, the market pops up. Where is it right now? 1324. The low is 1315. The Dow is having a tough time. It can't even pop. It's up 10. The S&P's up 3, a little bit more. The Trin index is not giving me any reading right now. And there is the daily Dow and the daily S&P. More importantly, what I'm looking at here, let's just continue this. Then I'd love to take some calls. You've got the gold is down 10. You know, I've said this over and over and over again. Big deal. I mean, they can't even get gold to get to that 9-period moving average. The gold chart made a cup in the weekly chart, the daily chart as well, but made a cup, an arch formation that dreaded the H pattern, making a second one without even getting close to the previous high in the 1400s. It's now at 1263. I'm not impressed at all. That monthly chart is a very negative chart. Let's leave it at that. Silver's down at 20.26. High-grade copper is actually rallying today. And that's very interesting because it's so close to breaking down. High-grade copper held the 9-period exponential moving average left side, right side price time match. Today's the day, and it didn't break to the left side low that was a target of 3.1090, but it's trying to rally. The monthly chart also says lousy chart. Weekly chart says lousy. And now let's go to the final thing, which is the dollar's up 19 cents. And you've got bonds unchanged. And I'm going to go straight. After the break, I'll go to Joe in Boston. Be back with you, Joe, straight after the break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, Basil Chapman, Tiger Technicians Hour. Dow's up 9, S&P's up 3. Little divergence there. Today the S&P's a little stronger than the Dow. Yesterday it was the other way around, and the day before. Let's go to Joe in Boston. Hi Joe, how are you?
I'm well, Basil. How are you?
I'm very well, thank you. And just trying to prepare myself mentally for this change in climate here.
Yeah, I know. Get ready. Get your boots ready.
Yeah, the works. Yep.
I wanted to revisit this IPGP.
Yes.
We talked about it a couple weeks ago.
Right. So this is a very interesting chart. Folks, we're looking at IPGP. I forgot to type in here. This is IPG Photonics. Now, it's interesting. I just went through all the 50 stocks in the IBD top 50. I was sure this was in there, but I don't see it.
It's not in there.
It's not in there. I wonder why it's not in there. Maybe because of the criteria of earnings, etc. Not because of the price, but because of maybe that's what it is. Well, they should put it in because it looks fantastic. So now you're long, right?
Yeah, and I was obviously looking at that 70 area. It kind of pierced through. It's kind of failed. It does have a 23% short interest. So that's kind of why you get the whippy action with the big tails. I think you get a lot of short covering.
Sudden short covering, and then it pulls back, like the weekly chart especially. Now, this is a very interesting chart. Folks, I wanted to just show you this. I'm looking at the 120-minute chart here, and it's been walking the 9-period moving average, that black line. Yep, it slips underneath, but it keeps coming back. And then it respects it for just a whole bunch of 120 bars. And that, to me, is very important. There's this one little thing that's happening here after the last peak, I've got to look at this as a peak E/B with a little bit of an emphasis saying it better go very quickly from 71.34, which IPGP is trading up 2 cents right now. Why? Because if it does it, it can keep up that U-shaped pattern that takes it. This is one of those examples where I very, very often say, especially when I give a Master Trader series, I show charts like this and say, even though the objective of the Chapman wave is to get you to a D, sometimes the ride can be really tough because it's not a stair step with a level up and then a nice high-level consolidation, then another one. Sometimes it could be look just like a biotech stock that goes in U-shapes. It goes up, pulls back, and then up to a higher high, much higher. Then it pulls back, and then a U-shape that goes even higher. Very hard to trade until you identify that the cup formation left side, you have to have a certain number of bars to have a little patience. And as it starts moving higher, you can jump in. So those are tough to play. However, what's really clear about this is that it seems to respect, in my methodology, going to the fourth highest peak D. It's done that often enough that my suspicion is it's in leg C, probably peak C today, because it won't go above 73.97 unless there's a spectacular move by the end of the day. And that will get you either, if it's today, it extends leg C, but I wouldn't be surprised by Thursday or Friday if it's managed that quick pop above 73.97. It also had a round number low of 70. So 73, that's really what you want to be looking at. Now, this is the interesting thing. That'll make it leg D at a recovery high in the weekly chart, in the daily chart. It's leg D. I don't know if you've done this, but it's leg D in a cup formation in the weekly, but it hasn't closed above the previous high of 70.11 back in the week of the 15th of February. The high so far is 73.97, but the high close so far in the past couple of weeks, highest close has been up in the 68 area. So we'll see where the week has just started, and already we're above the 68.27 was the low. Today's Wednesday from Monday. This is nice action. Here's what I'm also going to recommend.
What about the? It seems like the technicals and the monthly are improving on the bottom there.
Well, let's do the weekly.
The weekly and the monthly. Yeah.
You see, the daily is 83% in the stochastic, and the MACD is still very strong. The 9 period is good, and I'm sure I have one particular index that's giving me one particular tool that's saying it's within a few days of giving a signal that says it's going to have very limited upside, and it should start doing some testing. I wouldn't say the 68.88 9-period moving average low, but it should do some testing of a high-level consolidation at least coming up within a few days. That's number one. Number two is the weekly chart has got the cup formation. I don't have any sense yet. The left side, right side, it's a little distorted. I like the action, but the MACD is strong, and the stochastics at 75%, it's improving, but not yet in the 80%, which would give me absolute surety to say to you, wow, this is great action, so that I don't even have to think of a more conservative. But I want you to look at the monthly chart, which has an inside buy mode in the Chapman way. So I'll be back with Joe in Boston. We're looking at IPGP trading now. It's down 15 cents. IPG Photonics.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, we're back, and the Dow's up 14, S&P is up almost 4, and the VIX index, just to give you an idea of what's going on, is down to 13.23, down 16. It's going to be very interesting. We're watching this closely. Now, what I'd like to do is to go back to Joe, looking at IPGP. Joe, the earnings came out, I think, beginning of November. So that's out of the way.
Basil, the earnings came out. They missed by a few cents. They gapped it down $6, and then within like 5 days, they took it all back.
Yeah, in my next Master Trader series, in fact, I'm going to be talking about gaps that get filled really quickly. There are examples of gaps that I've got where the stock gap down, huge gap, then continued lower, and then reversed. And if you looked at the chart, you wouldn't even be able to find the gap. And that's on an earnings report. So when they reverse back up and then sustain the move up, that's a very powerful move. That says that whatever the disappointment was perceived to be is considered just a non-entity in the analysis anymore. Now, let's just go back. Within the monthly chart, this is a pattern that I love to look at. You get a sharp move up. It's like a flagpole pattern. And then a very concerted move to the down, a straight line move up, and then a straight line move down. And then what happens is the very next bar of the turnaround makes it a turnaround that does not retest the low, or if it was a gap at all. And then what you get is what I call an inside buy mode. That means that there's a buy mode that goes to peak A, B, C, D. In fact, I wrote this down as a potential demonstration chart. There are very few times when it's really difficult for me to put an up arrow in a chart. I need more evidence. And when that evidence comes about, very often I've gone from a plus, which says that's the start of the move. You're already almost at the D when I turn around and say, oh, I need to put an up arrow.
Right.
So this is one of those, and I'll explain why. The speed with which it came down back in December of 2011 to the 3268 level from the 78 high at peak E back in 2011, July or whatever, I think it was. No, I'll just say right now, it was in June of 2011.
Right. That
said to me that the MACD and stochastic was still declining. So the move up should have had an arch formation and a retest of the low. Instead, what it did, instead of going back to 32.68, it went to 36.93 and then started another cup formation to a B and then to a C, and now it's in leg D. Now, this technique really is basically a rectangle formation, even though I show a symmetric triangle within that. What it says is, if you go to a buy mode within this context, you can go just under, right to, or just above the previous high, and then you've got to be careful. So here we are. We're in leg D in the weekly. We're in leg D in the monthly. Under the previous high of 77.94, the MACD and stochastic are improving in the monthly, but they're not great. They're just improving. The weekly chart says nice action, but the stochastic's not at 80%, so I don't really have a comfort level. The daily is the one that's going to get you there. So here's my recommendation. If it breaks above 70, if it goes to 73.98 or higher, that's leg D. On some part of the position, I'd either be lightening up or I'd raise the stop real tight. Why? Not to say that it couldn't go higher. It's just now you're getting the greatest chance that there could be a lot of resistance coming up and it could just stall.
Yeah, what I'd like to see, Basil, is I'd like to see it kind of work its way up to that 73 to 75 area and then to go sideways for like a month, right?
Correct.
Up at the highs, because underneath the all-time high, which is like 78.5, and there's 77.94 there, and just kind of go sideways and build some strength up in that area.
Absolutely.
And then, that would be a lot more bullish.
Correct. Not only that, but in looking at this, what you really want to see is that it isn't a cup formation. It's a decided rectangle that's moving to the upside. The weekly chart is the one. You want to see the weekly chart close above 70.11 for 2 out of 3 or even 4 weeks.
Right.
2 out of 3 or 3 out of 4 weeks, consecutive weeks,
Yep.
And that'll say exactly what you're doing. And obviously, this is a stock that's in the right area right now, and I don't want to fight with stocks that are in the right area, that are doing well. So I think you've got a fabulous thing. I would keep a core position and maybe trade around a little bit, and that's all.
And just last thing right here, it's a different stock, but I wanted to see if you could squeeze it in by the end of the show, is BAC, Bank of America, on the monthly. This is the fourth bar that it's taking out the previous high, so I don't know if it probably does. I don't know if that doesn't qualify for a recycle. If you think that this is E in the monthly, or you think it's, what you think.
I don't have to do anything with that. I'm calling it E because it's still good go to F, and I don't have any signal. So I'm not even worrying about. I love Bank of America. We keep missing it. Even today, I had it in as a buy and I missed it. Yeah. It's going to leg D, and that weekly chart is really improving. This is a really good-looking chart. Good eye.
Honestly, I think this thing in 2 years is in the high 20s.
I think so. Well, my target would be 18 to 19. That would be the next target.
Yeah.
Hey, good eye, Joe. Thanks you so much for calling.
All right, bye.
Let's go to Dan in Basking Ridge. Hi, Dan. How are you?
Doing well, Basil.
Good.
Hey, I wanted to. I know you're always bringing out, record numbers, and there's one I saw last week about a record art auction.
With Coons, there was that dog, that balloon dog that was sold, I think, for $58 million.
No, this is $142 million.
Really?
For 3 studies of Lucian Freud.
Yes, of Lucian Freud. It was done by a good friend of Freud's, and and can you believe it? Well, there's something about art that I followed it. Well, I was when I left high school, I became a visual. Well, I was studying. We called it commercial art. Now you call it graphic design. And so I've always been involved in some way of looking at it. That's why I look at charts the way I do. It's a visual presentation. And so I followed the arts for years, and there's just something that goes on. And I don't know if anybody remembers. It was 2.5 years ago, maybe it was 3. And I think it was about 2 years ago. I said, watch, folks, modern art, modern architecture leading to the skyscraper, next very modern skyscraper. That's what we're looking at, and I think that's the phase we're in. And this is there are maybe 4 or 5 different icon areas that I look at when going to a really major market top. I still think we're going to it. I don't think we're even close to it. I think we're still going there. The art market is purely, when I go to a museum and I see a painting that is just completely, say, royal blue. Nothing else. It's just royal blue. There's not even a line. Like the old Paul Klee, but Paul Klee at least had lines. But when you look at that and you say, they paid what? 5, 15, 20 million for that? Well, you've got to understand that part of it is that it's the genre of the artist. It's not necessarily that specific painting is worth that. It's just that art museum could only afford that amount of money, and that particular artist was so in vogue that's what they came up with, because there is nothing else but just a sheer single color. So basically what they're doing is they're buying a symbol of that particular artist, and whatever they pay for is the price that's paid. And that's how art works. It goes in phase and out. When it's out, you can see prices plunge. I wouldn't be surprised if in 4 years or 5 years' time, the paintings that are selling for 58 and 128 million right now are way, way lower. They can be 2/3 lower, even more. It's just the way it works in the art world. But what it does is, it's a visual it's an icon. It's really like I call the skyscrapers, like the Empire State Building was a time freeze of man's ego. That I think Raskop was his name. I can't remember offhand now who the people were that proposed putting up the Empire State Building, but I think the guy from General Motors had something to do with it. And that's just a time freeze of man's ego. 1929 was when the papers were signed. It was opened 18 months later, to the quickest and most. You can imagine in the Depression, nobody wanted to lose their jobs, so they worked. That was the most incredibly well-constructed building ever. Why? Because it was a symbol of hard times, that people had a job, and they knew when that job was done, they would not have another job. They wanted to do the very best they can. And that's why when a plane went into it, I think in the 1950s, there was barely a scratch. And that's really quite something. So art, absolutely. Is it going to get crazier? Absolutely. I just don't see any reason why it shouldn't get crazier, because that's the nature of this market that we are in. However, there is no way. It's like the in 2000 when you got these incredibly speculative NASDAQ stocks that had pretty much a year's worth of trading between 9:50 and 9:30 in the morning, where they were up $30 to $50 or $60 just in the space of minutes. So all that you can say is the price that's being represented is the last price that anybody was willing to pay until the next person. So I'm going to be watching this real closely, but I have a couple of, maybe 2 specific icons that I'll be looking at to tell me when I can start expecting that we've made almost the top of the market. I don't know if I'll be right, but there are 2 sitting out there, and I'm waiting to see when and if they show up. If they show up, then no matter what happens, I'm saying, okay, now I'm becoming a bear, a real bear. But until then, till then, I think that we've got, even today, I know that up until today, in the last 2-3 weeks, I was at a birthday party over the weekend. I think it was Saturday night, and out of the 30 people that were there, not one person even mentioned the stock market to me. Not one. If you think of 2000, even when I was playing tennis, indoor tennis, there were monitors. I could see what the Dow was doing from the monitors. And now when you go in, you're lucky the CNBC isn't on. There's nothing. There's very little news. In fact, we've got very overbought levels and some spectrum, but nothing like the top in 2000. I hope that somehow answers something about the question you have.
Yeah, it was more of a comment than a question. But do you think that this will be at least into April of next year before we actually do see some serious?
I'm doing some work now. It's what I call the 7-year cycle that I'd done back in the 1980s. It's a 34 to 37, even 38-year cycle. Within it, there's a 7-year cycle. And that takes me to somewhere around the first quarter of next year. Can that work out? Do things work out so symmetrically? Sometimes they do, sometimes they don't. I don't know, but everything I'm looking at says that when we get into the crazy market phase where you start to look at Alcoa, a deadbeat stock, suddenly becoming the sexy stock of the Dow, and starting to move up in 5 and 8 point increments. I don't know if that's going to happen. I'm saying this is the kind of thing that would, for me, make a major top. If that is going to happen, it takes at least 6 to 8 weeks once the recognition is there. So that's like the Dow made its top in March, the mid-January, I think the 14th of January 2000. You still had to go into March before you got the major top in the NASDAQ and the NASDAQ and the S&P. So that 6 to 8 week period after you've gotten hysterical, that coda, that where nothing else counts. Everyone is talking about the stock market everywhere, all around the world. And this time, here's the thing. This time, it involves the entire world. It isn't just the NASDAQ in the United States. It is the entire world. So I'm looking at something that has the potential. But before that, I want to see a good 15 to 22% drop just to scare the bajillies out of everybody before we can do that. I don't know if we're going to get that, but I would like to see that because that'll set us up to say either we're going to break down in the market because the Dow is now breaking the key 12,000 area, or it's saying, there's no time even to pull back. We're just going straight up. I don't think so. I think there will be some kind of a setback at some point. I don't know when it's coming. We'll see.
Great. All right, Basil. Thank you so much.
So thank you for bringing that up. Yes, I did notice it, and believe me, I should start cutting them out again. I must find them. I must get my little book ready like I used to do of all these different things and put them together, and eventually they come together to say, wow, look at that. Every single sector that we're looking at is starting to go crazy. But thank you so much for calling, Dan, and thanks for bringing it to my attention.
Thank you. Be well.
I appreciate it. You too. I'll be right back, folks. In fact, I'll be back. I wanted to look at a couple of stocks. I wanted to look at the XLF because as long as you've got the rotation going into different sectors like the financials, like the steels and the aluminums maybe, then I think we can hold and not break down here. I'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. I actually have a picture right here of the Burj Khalifa. And you remember they changed the name a week before. Dubai went into crash mode. The stock market tanked. This is the same thing that happened to the Petronas Towers. Anyone been listening to my show back in 2006, I think it was? Oh, 1996, you weren't listening to the show. But I called that major market top, Taipei. And now what we're looking at is this incredible building. A week before, they changed the name from Burj Dubai to Burj Khalifa. Khalifa. And, yeah, it's a beautiful building, a spire. It's, wow. I'd like to see it for real. But anyway. So that's that. Let me get rid of it. Now, let's talk about the XLF. The XLF is in leg E in the weekly chart. Okay. Select Financial S&P Spider Fund. Going towards the where? 2226 is the 200-period moving average. That's the target. I have that as a target. Unfortunately, I do not have it. I keep talking about it, but I never actually, whenever we get in, we take a little profit and then we're out, or a tiny little loss and we're out because it has tended to pull back quite sharply. But right now it's in leg E in the weekly. That's at least what I'm calling it right now. It might be a C, it might be, but the MACD is just turning up. We'll have to wait to Friday to see where it closes. The MACD is very important because if it closes with a wide beta, in other words, the fast-moving average next week, not this week, but next week, actually opens up, and a green line goes way above the red line, that allows for more room to the upside. The stochastic's at 89% and increasing. It's good. So the weekly chart is good, and the monthly chart is going into that rising trend line resistance, which takes you to, by the end of the month or maybe December, it should hit that 22, 26 level. And then you get the daily chart. That's this chart right here, which has made a beautiful cup formation. A number of almost cup and handles, but actually the issue is 20.93. It went to 20.83 peak D. That was a peak D. The next peak D in the Chapman wave methodology was on the week of the 18th. On the 18th of September. Pulls back again. Doji candle goes up to an E, pulls back, and starts a brand new move. And I think this is a brand new move. Wow. 21.27.6. Oh, all it needs to do is to go to 21.28. Just another 5 cents higher than it is right now. And that means this week it's going to leg C. And that could take us into, what I always say is that if by the first to second week of November, if the market is holding well, so often in my memory, it goes all the way to the last trading day of the year. It goes higher. So here I am. Let me just quickly sum up what I'm looking at, because we've got Larry Pesavento coming on next. I've got only about a minute or two. Let me just do this. I'm going to grab the chart right here. This is the daily chart. Remember, we were looking at the same kind of action going to leg F the 2nd of August. And if it did that, I said, we've got to be very careful. So we have, in fact, we are short the Dow, a really tight stop, but we are short the Dow. Most importantly, the candle yesterday, which would have matched the 5th of August, the very next day after that second high, to make a peak F, was not an ugly candle, but a negative candle. We had a doji candle. The third day was the confirmation that we were going down. If you remember, it took me a couple of days, and then I realized we were going. Only then did I go short. I was a little late on that particular one. Normally at D, E, or F, I will short the down. Now look at this. Right here, this for one candle doji, second candle doji. If ever there was indecision, but you know what? Indecision can turn out to be a consolidation. One of my levels, a close above 16,031 is positive, and we will go higher for the rest of the week. A close below 15,920 to 15,900 says, aha, we can come down to the 15,878 9-period moving average. Those are the levels I have to look at. I have no choice. I'll be back tomorrow. Thank you for being.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.